No matter who wins the 2024 election, tax reform will be on the table. Those 2017 tax cuts expire at the end of next year if nothing happens between now and then. And if tax brackets go up, that would make one area of the market even more attractive, according to my next guest. Joining me now is Nick Venditti, Senior Portfolio Manager at Allspring, head of the Muni team. It's great to have you here. And I'm sure our audience could guess that Munis would be one area people immediately look towards. But what's weird is that they've been selling off lately because of rising rates and not doing better.
Yeah, they absolutely have, right? There's kind of two big weights on the muni market right now. The first is obviously the sell-off in treasuries and fixed income in general. The other is supply. Supply in the muni world is very, very high, higher than it has been for much of the year. And part of that is driven by the fact that for the last 2 years, muni issuers haven't had to issue debt. They've had COVID cash, stimulus money, but that money's running out. And so they're rushing to the markets.
Maybe do you think they're trying to get ahead of the election? Does the election matter?
Certainly it does, right? Because it presents uncertainty and volatility. And in the muni world, we don't like volatility, right? We are sexy in our consistency, if you will. But in this instance, they were trying to play the low rate game when just 10 minutes ago, it seemed like the 10-year was at 380.
I see. So now they're looking at it and going, okay, well, we have to issue now, or we better issue now. Does that ultimately help muni investors? They're going to have plenty to pick from at reasonable yields then if they are concerned about tax brackets in a few months' time.
It certainly provides an incredible entry point from my perspective, right? I think fundamentally munis look strong. Absolute yields are very, very attractive, especially if you're on the upper echelons of the tax bracket. And then to the extent that the election pushes tax brackets even higher, the value of the tax exemption goes up pretty materially.
Can you give me some examples? I don't know if there's any literally from this week, from recent days, of areas where I don't know what the stated or tax equivalent yield would be.
Yeah, so look, it's not uncommon to find a 20-year AA rated muni that's yielding in excess of 4%. If you're a 37% taxpayer, that grosses up to about 6.5%.
Wow.
That's fantastic. That's worth doing a cartwheel for, right? I mean, I think ultimately we're talking about the potential for equity-like returns in an asset class that is high quality, low volatility, sort of sleep easy at night, and that's interesting.
But as the conference board told us a little while ago, Americans are the most optimistic they have been about stocks in literally about 40 years. So nothing can compete with the stock market right now, it seems.
and haven't been able to for quite some time at this point. I think ultimately you can't ignore what's happening in the equity markets, but munis and fixed income in general, for the first time in quite a while, can represent a meaningful part of your asset allocation and provide you kind of portfolio diversification.
Are there any areas you would stay away from? I mean, obviously, we always look for the highest yields. You start to go, okay, well, wait a minute, don't do anything too dodgy. But places where there might be some underlying macro problems or regions or types of issuers that you might say, listen, maybe not that one.
Look, credit spreads are tight in munis. They're tight in kind of every fixed income asset class. And so I think investors do need to be aware of that dynamic. But the interesting thing about munis is that BBB rated munis default less frequently than AAA rated corporates. That means it's more likely that Apple will default than the Chicago Board of Education. And that sounds insane, but we have decades and decades and decades of history.
You picked an interesting example by the Chicago. You're sure with the Chicago Board of Education? You could have said, the Wisconsin Board of Education, perhaps.
But even something with that kind of headline risk historically has done better from a default perspective than even the highest rated corporates. And so there are opportunities for investors to take some risk in munis and pick up quite a bit of additional yield.
And there's no sort of ticking time bomb where we say, okay, the COVID cash has now run out. Now they're going to tap the markets. The other way to read that is they're becoming a bit more stretched, these finances.
They certainly are. But munis, unlike the federal government, are required to balance their budgets. Now, they balance their budgets by hitting you and I for money in any way they can get it. But that puts them generally in a much better fiscal position than the U.S. government that's sitting on $36 trillion of debt.
It's fascinating, Nick. Thanks for joining us to talk about it. We appreciate it.
Absolutely. Thank you for having me.
Nick Venditti with Allspring.